Hi, welcome to Market Alert for Thursday, the 14th of June 2018. So we see the pound starting off moving higher. We've got some buying here, followed by some selling at the previous day's close, and also the 50-bar average. Market then sees the selling. We get a bit of testing here. Market fails to close above the 20-bar average. See the shorts taking profits here. But then we head down to the 133.50, which I mentioned yesterday. Keep an eye on this level. If it's broken, market breaks it with some selling. You then see two attempts to come back. Market fails, drives lower. Then you see some testing here on high volume. Then we get the two test bars there, the two blue bars, before the market rallies back to the previous day's low, and then comes back to the S1 and then manages to get above the averages and move higher. Ready for the FOMC. The dollar rises, the pound drops as they increase rates. So you'll see that here they actually increased to 2%. Very predictable, and they intend to raise rates again by a further 0.25% in 2018 as well. So that's the September and December live meeting, unless they actually start going live each month, but we'll see. No surprise to me, they're going to get these rates as high as they can, knowing that we're in the longest business cycle now on record without a recession. I wouldn't say there was a full recovery, but there's certainly been a lot of debt sloshing around in the system to make it look like everything is fine when we know it isn't. Global debt has increased by 77 trillion in the last 10 years following the so-called banking crisis. So we see the market finding support at the S1. Dollar moves lower, pound moves higher. See some profit taking here, trying to move higher back to the DP level, and you'll see prices sideways to higher. And at the moment, prices above the DP level of today and of yesterday as well. So a bit of a bounce going on in the pound there. You can see this in the daily chart. As prices attempt to move higher, they've got to take out the 20-bar moving average and also the 134.47 as well. Are we actually back above that 133.50? We are indeed. This is the line here. So again, they've managed to bring the market back above here, which you see there yesterday after the FOMC announcement. News today, what have we got? Super Mario is out speaking today. That's probably the most important thing, is talk of him reducing the QE, the bond buying. That will be interesting to see. That will have the same impact as it will in the US when we get to October as well. So let's see what he's got to say for himself, because he's been spending 60 billion a month in buying back bonds and debt in Europe for goodness knows how many years. Absolute mess out there as well. Another 10 trillion of debt. Italy's got problems, but again, we know all about this, so there's no point in going over it again. Just a mess. The Dow yesterday tried to move higher, then was met with some selling at the 25,400 level. The market comes down, finds support at the DP level on several occasions, and tries to hold back above all three averages there, and finds resistance at the 25,350 level there. Market comes down to 25,300, sits on it, news hits, and then you see the buyback to the previous day's close. However, the market's not held and started to move lower. As interest rates rise, the stock market doesn't like it because, well, it used to be the case, it isn't anymore, but you could get a safer return by having your money in the banks. That's no longer exists, but it looks like the theory is playing out here at the moment. You see there, but certainly a lot weaker. If we look at the daily chart, you'll see that we are starting to move lower. Watch the 25,000 level. 25,083 to start with, but watch the psychological level of 25,000 for this market. Meanwhile, in Bitcoin, this had another down day yesterday. As we said, watch the 6480, went straight through it and is now coming back, doing their best to try and hold this market. Again, still short in my opinion. One day doesn't change a trend, move to the upside there. And I would expect to see at some point the 5855, which goes out to February of this year. This low here being retested before this market has any attempt to bottom out from the recent down move that we see going on here. Right, that's it for this one. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next one.